Hello, good morning, and welcome to today live trading section with Vetexx. Okay, so today we are going to be analyzing the synthetic markets and checking what the market has for us. So every day we do this live synthetic indices trading section from 6 a.m. to 7 a.m. if you are joining us for the first time. And at the course of this live session, all right, if you have any question regarding anything that's confusing you, okay, or during my analysis, you can just drop your question in the comment section. So if you are seeing my face for the very first time, my name is Vetexx, and what I do on this channel is every day I show you basically how I trade step by step, and you can always follow me and learn from my trading. And you can also apply the same thing in your trading system or learn the trading system I use. So what I'm going to be doing right now is share my screen with you and show you how I do my analysis and how I trade synthetic indices. So I'm going to be sharing the screen with you right now so we can get started. Okay. So first of all, on synthetic indices, every day we analyze about 14 pairs, okay, which is basically the volatility indices currently and then the step indices. So um, before I proceed, okay, the trading model we use is I use basically to do my analysis is called the advanced market structure, or you can always call it the agro market structure. Basically, trade structure and liquidity. Okay, you spot out the structure, you spot out the liquidity, wait for price to come to your POI, and then you execute your trade. So that is basically how we trade. So before I go into full analysis today, let me just give you a very quick breakdown of how the system works. So basically, we have price giving us a higher high, higher low, higher high, higher low. So we have our liquidity being created, and then we'll have price sweeping the liquidity to give us the structural, to give us a protected high, and price taking out this low to give us what break of structure, price retracing 50% to give us structural liquidity, and this structural liquidity is used for continuation, and price taking out the newly created low to give us what second break of structure, and then we have price retrace into the POI, right, to take out this structure, tap into the POI, and continue the move to the opposite direction. So basically, we have 5 rules that guide the advanced market structure, which is rule number one: there must be a sweep of liquidity, which is this. This is sweep of liquidity. Okay, this is the rule number one. This sweep of liquidity, which is used for correction, is called the transactional liquidity, and then it will give us a protected high. Now, this protected high will retrace. Okay, after the sweep of liquidity has been taken out, after this liquidity has been swept, okay, it will then retrace to take out the newly created low, which is rule number two. There must be a break of structure after the sweep of liquidity, and then price will retrace 50% to give us structural liquidity, which is our rule number three. And then rule number four, price must retrace to take out the newly created low, okay, after the structural liquidity has been formed, then to give us what second break of structure. That is when we have this, okay. Then the rule number five, price must retrace to take out the newly created liquidity, which is the structural liquidity, and the move will continue to the opposite direction. Okay, so this is it. So you can see that we have structure and then we have liquidity. So once our structure is formed, we always wait for price to take out the liquidity and continue to the opposite direction. All right, so this is basically the system we trade, the trading model we trade. It's called the advanced markets. Okay, and then the same thing you do when you want to sell is the same thing you look out for whenever you want to buy. All right, so this is it. So what we do every day is we'll spot out this pattern on the 24-hour time frame or the weekly time frame. Once we spot out this pattern on the 24-hour time frame or the weekly time frame, this is now our direction. Okay, this POI is the starting point, and this low here is the finish point. This is the starting point. This is the starting point and this is the finish point. So basically, before we do any to take any trade, we used to do top-down analysis, whereby you start from the higher time frame then to the lower time frame. The higher time frame will give you a clearer picture of where price is coming from and where price is going to. So once you spot your continuation once you spot your direction on the 24-hour time frame or the weekly time frame, we'll come to the 4-hour time frame to spot out our structure. Okay, once you see that structure, this same structure on the 4-hour time frame, okay, then we wait for price to give us a continuation on the 30 minutes time frame or on the 15 minutes time frame. Okay, so those are the time frame we work with. We work with uh 20 weekly time frame, 24-hour time frame. This we use that as our directional bias. 4-hour time frame and 1 hour time frame is also used as directional bias, but it's on that time frame that we scale down to the lower time frame, which is the 15-minute time frame and the 30 minutes time frame to spot our continuation. So it's on that time frame that we enter. So take for example, we already know that price is starting this. We already have a sell structure on the weekly time frame. Okay, let's say price is already coming, price has taken out the structural liquidity, tapping the period and moving down on the 4-hour time frame. Okay, on this 4-hour time frame, we will then go to the 30 minutes time frame and 15 minutes time frame and wait for price to give us a continuation like this. So once price does something like this on the 15 minutes or 30 minutes time frame, after we spotted our 4-hour time frame that okay, price is moving from here and is coming to this point, we will then start looking for continuation setup. So start having continuation setup like this. So that is basically what we do every day, top-down analysis. So we spot our structure from. So what will happen now? This is the 4-hour time frame. Okay. Remember on the 24-hour time frame, we already know that price is bearish too. On the weekly time frame, price is bearish. Okay. Or just say that on the 24-hour time frame below, price is just bearish, and then we'll see this. Okay. On this 4-hour time frame or 1 hour time frame, we'll go to the 30 minutes time frame or the 15 minutes time frame, and then we'll start anticipating the sell. Okay, so price will tap into this point of interest. You can set your limit entry or you wait for your confirmation entry, and then price will drop to the opposite direction. So this is what we look out for every day, and this is how we do the analysis every time here. So what I'm going to be doing now is I'll be checking out the watch list now, and then do the analysis, do top down analysis on all the pairs we'll be trading. All right. So let me just check our watch list and let's see the first pair we have today. So what I'll be doing now is basically marking them out. So if you're having any confusion about this, how I go about this top-down analysis, you can check my previous video, my previous live session. I've made a lot of videos about it. And then you can also check the what playlist on this channel. Everything I just explained is there. You can also look it up from there. So on V100, starting from the 24-hour time frame, starting from the 24-hour time frame of V100, this is what we have. First of all, we have our row number one, sweep of liquidity. Row number two, first break of structure. Row number three, we have what? Structural liquidity. Row number four, we have what? Second break of structure. And then we have our protected high. So this zone becomes what? Our point of interest. So when price take out this structural liquidity, tap into the point of interest, and you see the move is now continuing to the opposite direction. Now this is the 24-hour time frame. So what do we do next? We'll go to the 4-hour time frame and check if you spot another continuation. So if you don't spot the continuation, we'll go to the 1 hour time frame. So let's check the 4-hour time frame, which is the first. On the 1 hour time frame, we can't see anything. So go to the we go to the 1 hour time frame because you can't spot any continuation on the 1 hour on the 4 hour. So let's check the 1 hour. So in the 1 hour we have this. We have a sweep of liquidity, which is this. We have our row number two, which is first break of structure. Row number three, we have our what? Have our structural liquidity. We have price taking it out here. Okay, this is structural liquidity. And then we have our protected high. So what do we anticipate? We want price to come into this zone, tap into it, and then start giving us continuation. Alright, start giving us continuation to the what opposite direction. So this is what we anticipate. I believe this is clear enough. Yeah. So this is what we are going to be anticipating on step on V100. So let's check the next, which is V50. Let's check V50. What do we have on V50? Starting from the 24-hour time frame, V50 just smashes the target. V50 just smashes the target on 24-hour time frame. So we don't have anything currently on V50 unless we go to the 4-hour time frame. So V50, this is what we have on the V50 on 24-hour time frame. On 4-hour, let's go to the 4-hour. Okay, we have this move on the 4-hour. You have what? Sweep of liquidity. You have second break of structure, which is our row number two. And then we have row number three, structural liquidity. We have what? A protected high here on the 4-hour. And then we have second break of structure, which is this. So this one becomes our point of interest. So we're anticipating price to tap into it and then start giving us continuation. Okay. So this is what we anticipate on V50. Okay. We have this on V50. But there's a place price is trying to react from, which is somewhere around here. Okay. So price might hold somewhere around here or it might keep coming up. But I don't have, let's just see what's going to happen around here. Okay. So we have this also, which is sweep or liquidity. You have our structural liquidity here. You have this, and then we have first break of structure. You also have our second break of structure. So this is on the constant point of interest. Now go to the 30 minutes time frame and see if you are going to see the continuation. So there's a continuation here. Those ones have already played out. So currently there's nothing on V50. So that leads us to the next pair, which is V25-1S. So start our analysis on the 24-hour time frame and check where price is coming from and where it's trying to go to. So on the 24-hour time frame of V25-1S, we only have this on the 24-hour. So we have a sweep of liquidity. We have our first break of structure, which is here. We have price giving us structural liquidity, and then we have second break of structure, and then we have this low here. So this becomes our point of interest. Okay, and then price will, this is 24-hour time frame, price will come down here, give us a continuation on the 4-hour. And inside the 4-hour, we'll go to the 30 minutes, 15 minutes, and start buying to the opposite direction, which is this. So this is what we have on 24-hour. And then now we have, let's check the 4-hour time frame, because there's been some move on the 4-hour lately. So we check the 4-hour. On the 4-hour, we have this. Price has been consolidating for a while, but we have this on the 4-hour, which is what sweep of liquidity, break of structure here. We have a structural liquidity here, and then we have our second break of structure, which is here. So these ones is our what protected low. So the whole of these ones becomes our point of interest. Alright, now this is the starting point. Above here is the finish point. Okay, then what do we do next? Go to the 30 minutes time frame and check if you spot a continuation there. So we have the continuation here played out. Okay, and see we have a continuation here that played out. We also have this. We had this already played out. You can see this already played out. The price coming to tap here, right? Welcome tap here and then move. Okay, quickly let me check something. Okay. All right. Okay. So this is what we have on. You see one is a setup played out here, which is here. Okay, one played out here, another played out somewhere here. Okay, I think this one too is trying to play out. You have this is crazy. So wait for price to leave this zone and then give us a continuation like this. So from there we can start taking more buys. Right? Because most of the zone has already been mitigated already, and we don't want to keep risking on those pairs any longer. So what we do now is wait for price to leave that particular zone and we can continue taking buys. So this is what we continue to do. This is what anticipating for now. Okay. So let's check the next pair, which is the V75-1S. Starting from the 24-hour time frame and on the weekly time frame, V25-1S is on a bearish trend, but it didn't give where it's actually coming from. But on the 24-hour time frame, it does give us where it's coming from and where it's going to. So we have our rule number one, strip of liquidity. We have our rule number two, first break of structure. Rule number three, we have what? Structural liquidity. Rule number four, second break of structure, which is this. And then this is our protected high. This one becomes what? Point of interest. So this is the starting point. And right here is the finish point. Okay. So now what do we do? Go to the 4-hour time frame and check if price is going to give us a continuation. So what do we have here? We have what? Our rule number one, which is support liquidity. Rule number two, we have what? First break of structure. Rule number three, structural liquidity here. Rule number four, we have second break of structure. And this becomes our what? Protected high. So these ones are point of interest. So what is the next thing? Price will have to come into this zone, tap into this zone, and continue the move to the opposite direction, giving us continuation entries until this low is taken out. So this is what we have until this low is taken out. Okay, so this is what we are going to be anticipating. Now we will check the next pair, which is V50S. V50S. Starting from the 24-hour time frame, V50S is bearish, is bullish, and then we have this move on the 24-hour time frame. The price is moving higher high, higher, giving us series of higher high, higher low. So On the 24-hour time frame, we see that price is bullish, but on the weekly time frame, it just smashes the target. So when we go to the 4-hour time frame, what can we see on the 4-hour time frame? So on the 4-hour time frame, we have this. We have a sweep of liquidity, which is row number one. We have this break of structure, and then we have structural liquidity, and this is our second break of structure, which is here. So this one becomes what? Point of interest. And then this is our what? This is our point of interest. So what do? We go to the 15 minutes time frame. Or first of all, check the 30 minutes before the 15 minutes. So on the 15 minutes time frame, we had this setup that played out, which is sweep of liquidity. We have our structural liquidity here. We have our protected low, which is this. And then we have first break of structure, and we also have second break of structure. So this becomes point of interest. And then what happened? Price goes both to the opposite direction, smashes the target. So this is what happened. It was a very nice buy, but didn't take it because let's give ourselves the 4 point of interest. We don't usually know the one price to react from, and we don't want to be used as liquidity, so we just stay away from it. When the price comes in and give us something very good, then we can have more hope of and taking more interest. So we'll be on the lookout. So the next we are going to be checking is Vetexx. So Vetexx, starting from the weekly time frame, Vetexx is bullish, but it hasn't smashed the target yet. And then it come. Let's check the 4-hour time frame. If you have anything on the 4-hour time frame, because we're not going to be looking for sales until the buy is taken out. So nothing on 24-hour time frame. On the 4-hour, let's check the 1 hour. The 1 hour time frame, what do we have? This. Okay, nothing tangible to the 1 hour. Let's check the 30 minutes time frame. Okay, we have this sweep. This let's come into the zone. So currently we don't have anything on this Vetexx at the moment. So let's check the next pair, which is step 300. Step 300 has been bearish on the weekly time frame, and then you give us this continuation on the 4-hour, but price didn't tap it before rejecting. We're anticipating something like this, and then refuse to do that. So we'll still be on the lookout on step 300 since nothing is happening currently. I feel this is what he wanted to do. So this is this is a sweep of liquidity is used. So it's using this recent price action, which is you have a sweep of liquidity here, and then this becomes what? Structural liquidity. So it was taken out and then it continued. But this has already been used because this was the structural liquidity we used initially. And price take it out, smashes the target, come back, do the same thing, smashes the target. So there's nothing valid on V on step 300 at the moment. So we check step 200. We have this on step 200, or we have this marked up, but it's been invalidated because of, look at this, look at on the protected high. Simply means this 1 hour structure has been invalidated. So step 200 has been bearish for quite some time now. So this whole setup has been invalidated. So we check the 4 hour time frame and see if we have anything above that we can mark and wait for. So we have a 4 hour structure here, which is this. We have a 4 hour structure on step 200, which is, you can use this sweep of liquidity, which is rule number 1. We have this sweep of liquidity, first break of structure, which is this. And then we have structural liquidity. This becomes what? Point of interest. This becomes protected high. And second break of structure, which is this. And then this what? Point of interest. So the next line of action is that we are waiting for price to tap into this zone and start giving us continuation to the downside until this finish point is taken out. So if price do what you anticipate, this is going to be the starting point and this is the finish point. Okay. So if price tap into this POI, we'll start taking sales until this target is taken out. So this is what we have on step 200 on the 4 hour time frame. The next is V100S. We'll be anticipating a sell continuation or a buy continuation of V100S, but price refused to come to the point of interest. So you can see on the weekly time frame is bullish, but it hasn't smashed the target. This same structure is what we have on the weekly time frame. On the daily time frame, it's just buying, but on the 1 hour time frame, we have this structure here that we are anticipating for price to come and tap into and do its thing. So this is our what? Point of interest. So what we are anticipating next is price coming into this zone, tap into this zone, and then continue to the opposite direction. All right. So this is what we have on V100 days. So hopefully price come down here and do what we are anticipating. So the next is step 100. Step 100, starting from the 24-hour time frame. Step 100 is bearish on the 24-hour time frame. On the 4-hour time frame is also bearish. But on the 12-hour time frame, it has not given us any continuation on the 4-hour time frame. So Checking the 1 hour time frame, same thing. So for that reason, we are going to be leaving it for now until it gives us what we want. So the next is V15s. V15s has been bearish. We've been anticipating this 4 hour structure for a very long time, but it hasn't come here. On V15, we have this 4 hour, we have this 1 hour, and then we have a recent 1 hour structure that price take out the structural liquidity and then sold off. You don't know if price is going to come back. So this is it. Super liquidity, and then we have a first break of structure here, and then this is a protected high. So this becomes structural liquidity. Just as price will tap into it, take it out, and continue to the opposite direction on the 1 hour time frame. So currently this is what we have. So nothing tangible yet. Let's check the next pair on our watch list, which is V25. On V25, on the weekly time frame, V25 is bearish, which is we have a super liquidity here on the 24-hour time frame. Then this is our protected high. So this becomes what? Structural liquidity. First break of structure is here. And then this is our second break of structure. This becomes protected high. This becomes point of interest. So on the 24-hour time frame, we will anticipate price to tap into this point of interest, give us a continuation on the 4 hour time frame like this. So to tap into this zone, and then we'll take sales on the 30 minutes time frame or the 15 minutes time frame, which is going to be like this. Alright, and then we'll sell to the opposite direction. So this is what we are going to be anticipating. And of course, price is going to do it. Price is definitely going to do it. So this is our 4 hour time frame POI, and this is going to be the 30 minutes or 15 minutes time frame. So it's on this 30 minutes or 15 minutes that we'll start taking sales. That's why we need to know where price is actually coming from first of all, which is the most important, then we can ride it. So if price respects this POI, this zone is going to be the starting point, and here is going to be the finish point. So let's check the 500. On the 500, what do we have? On the weekly time frame, the 500 is bearish, and on the daily time frame, it's trying to be what? It's trying to tap into a 24-hour point of interest. So therefore, we have our super liquidity here. This is our protected high. Structural liquidity, first break. our second break. So this one is our what? Point of interest. So we anticipate price to tap into this 24-hour point of interest. So the same thing I just explained on using V25 just now, the same thing that's going to happen here. Okay, the same thing that's going to happen here. So this is going to be the starting point, and this will be the finish point. This is the starting point, and this is going to be the finish point. Next is V30S. On V30S, starting from the daily time frame, you can see that price is bearish. It just tapped into a 4-hour point of interest. Price just tapped into a 24-hour point of interest. So we have rule number one here, sweep of liquidity. Rule number two, first break of structure. Rule number three, structural liquidity. Rule number four, second break of structure. And then rule number five, price tapping into the point of interest. I want to continue the move to the opposite direction. Now that we know this is the starting point and this is the finish point, let's go to the 4-hour time frame and check if we are going to spot the continuation. The 4-hour time frame, there is no continuation. So go to the 1-hour time frame. The 1-hour time frame, still yet we don't have any continuation. So we'll be on the lookout on V30S. So the next pair we check is V90. So on the 24-hour of V90, V90 just smashes the target on 24-hour. Where price was selling from somewhere around here. Price was selling from somewhere around. Selling from somewhere around this place. Okay. So you see it's tapping to the point of interest. And then sold off. This was the starting point, and this was the finish point. So the same thing I've been explaining on those other places, the same thing that happened in this place. Okay, so price tap into this zone, give 4-hour continuation, and in the 4-hour, if you scale down to the 30 minutes time frame, you see continuation setup. So after giving this continuation setup, it smashes the target on the 4-hour. So once that happens, we'll stop looking for sales on that 4-hour time frame until this other time frame, this other 4-hour. So this was the first 4-hour time frame structure that formed this zone. So on this 4-hour time frame structure that formed here, knowing that on the 24-hour time frame, price has given us this structure, this direction. Okay, we know that price is going to start selling from this POI, and this is going to be the finish point. So we'll scale down to the 4-hour time frame and then look out for continuation on the 4-hour. So price give us a POI on the 4-hour. And inside the 4-hour, we'll get down to the 30 minutes time frame and the 15 minutes time frame to look out for continuation. So so we did that until price take out the target, which is this, until this target was taken out. So once this target was taken out, we stopped looking for sales until price came here and give us another 4-hour continuation, which is this. So price gave us this 4-hour continuation. We did the same thing we did here. When we got the 4-hour continuation, we went to the 30 minutes, 15 minutes structure, and price started giving us some sales until this target was taken out. And then price didn't give us another 4-hour, 1-hour structure again until the overall target was taken out. Then we wash our hand from what V91S. So let's check the 30 minutes inside the zone. If you are going to spot any setup that form inside, there was not much setup on this for on the 30 minutes. So basically, you see, we have a sweep here, structural liquidity. Price tap into the POI, stood off. We still have the same thing. Let's check the next one, which is we will not be able to see most of the data anymore. So this is where it's going to stop. So for that reason, we check the next pair. So there's nothing currently on V90s. Check this next pair, which is V75. So V75 on the 24-hour time frame, what do we have? Nothing on the 24-hour time frame. We're not anticipating anything on the 24-hour. Let's check the 4-hour. If there's anything we anticipate, nothing to anticipate here. So let's check the next pair, which is step 400. Step 400 is bearish on the weekly time frame, but on the 24-hour time frame, you can't really spot anything. So let's check the 4-hour time frame. Okay, on the 4-hour time frame, this is what we have. No clear structure that we have continuation here. So this recently played out. Okay, let me check something. Okay. So currently we don't have anything on majority of those pairs. So the only pairs we are going to be looking at for continuation is V25 1S. We'll be on the lookout for buy continuation on V25 1S, and also be on the lookout for buy continuation on V50 1S. And those are the two pairs. And also V50, we're going to look out for sales continuation. We're going to look out for sales continuation on V50 on V50. So yesterday we had this. Extra price give us this sweep of liquidity, partial liquidity, price tap into our POIs, trying to sell off, and then it retrace back, do all of this, stop stop me out, and then do this rubbish, and then continue to the opposite direction. It was a horrible experience. So this is all we have for today, and I believe you all learned something. So today we've come to the end of today's live analysis. Okay, so if you get value from this analysis and you are watching this on replay, do wait to like, do wait to subscribe, and don't forget to turn on the notification button so that whenever I go live, you'll be the first to join, and then you can learn how I trade synthetic indices. And also you too, you can learn from it. So see you tomorrow, same time, 6 a.m. to 7 a.m. Right, I'll see you guys on the other side. So if you're here to join the Telegram community, the link to join is also in the description of this video. So you click on it, you join, so you can always engage and follow up updates regarding trading in the community. So I'll see you on the other side.